Welcome, my dear viewer. And today I want us to discuss once again about insurance in general. I have sold insurance for quite a long time, for the last 28 years, as I do other businesses and consultancies. And many people confuse the role of insurance in their lives. Insurance is very, very important. What is insurance to start with? Insurance is basically a contracted loan by two or more parties, depending on the type of insurance, that comes in handy in life. Insurance can be divided into two. One, we have what we call the life insurance department and what we call the general insurance department. Life insurance department is where people take insurance policies for themselves individually. You can take an insurance policy for yourself, can take an insurance policy for your child, can take an insurance policy for your spouse. That's what we call life insurance department. And even before I go to general insurance, I want first of all to categorically make people understand why should one have an insurance policy in the first place. The purpose of an insurance policy is to secure yourself in the event something happens unexpectedly in your life. For instance, you can take what we call a life insurance policy. It can be called with a time limit or with a time span. You can take a 20-year policy. What the insurance company does, using what we call their actuaries. Actuaries are people who are trained on what we call statistics. Statistics comes in so that the company can know the kind of a risk it is entering into with you as the insured. The company is called the insurer. Let's say, for instance, you are 35 and you have taken a contract for 25 years with the insurance company, with what they refer to as the sum assured or the principal sum of 10 million shillings. What the insurance company does is that they tell you, if you live to see the 25 years expire through God's grace, you will be paid your entire sum assured of 10 million shillings after 25 years of expiry. And alongside will be earning what we call bonuses. So the life insurance policy earns you what we call bonuses in between. Some companies normally make payouts, scheduled payouts, depending on how the company has tailor-made its product. We have companies that pay what we call bonuses after every 5 years. So after every 5 years, you get a bonus. After every 5 years, you get a bonus. That is what we call partial maturity bonuses. And upon the contract expiring on the 25th year, if God lets you live to see the policy mature, you will be paid the final maturity benefit and now the principal sum. Now, note here, because people make mistakes and I'm so worried about it. In the event you pay for 1 year or you pay for 6 months or thereabouts, and maybe God happens to invite you for a morning breakfast, or you are recalled in heaven for further deployment, let's say through natural cause, either through malaria, through diarrhea, through COVID-19, through what we call, let's even say, blood pressure or diabetes for that matter, or what we call maybe you can even suffer from what we call myocardial infarction, a heart problem. The company has agreed, many insurance companies say, they will pay the full value of the principal sum, the full value of the sum assured. That's what we call the 10 million shillings is payable to your next of kin or the legal personal representative. And at the same time, they have a benefit they refer to as waiver of premium. Waiver of premium means you don't pay any more premiums. Number one, you are gone. So the family has already been paid 10 million shillings. And remember, if there were money to be paid in between, the company will still honor its obligation until the contract expires. So there's what we call the peace of mind. There's what we call the guaranteed income for your family members. In case, for instance, you lost one of your limbs, in case you lost one of your eyes, you lost maybe, let's say, one of your legs, the company comes in and pays you a certain percentage of the value of the cover. In the event you suffered from what we call serious disease that leads to your incapacitation, we refer to them as critical illness, that you can't even be able to work, the company still waives the premiums you've been paying, either monthly, quarterly, half-yearly, or yearly, and the cover still remains. So I do not see why you should value your car that much as opposed to you, who is the money-making machine. That's one of what you call the life policies, which is term-oriented. You can even decide to take a policy for your child's education. Let's say that you have a kid who is in class 1. This child has got 7 years to clear primary. So the program will start paying school fees for you. It can even pay for primary and even high school and university. And at the same time offering you what you call the protection, because anything can happen. So the school fees is guaranteed whether you are there or not. So I should stay without an education policy. I don't see why. And again, it is your responsibility to pay school fees for your child. And because you do not know what tomorrow has for you, it's always good to caution yourself against those unforeseen eventualities. So kindly take cover, education cover for your children. You can also take what we refer to as a retirement plan for yourself. You have 40 years, you have 20 years to go before you retire. We have what we call individual pension plan. And the beauty with this particular plan is that it will pay you money when you're retiring so that you can have income after your working life. So much. We also have what we call funeral cover. Nowadays, burial ceremonies have become the order of the day. You open your WhatsApp, you're finding thousands and thousands of what we call WhatsApp messages. They don't even seek your permission to actually list you in that particular, rather to put you in that platform of the burial of their loved ones. So because, death is certain. The only uncertainty about death is what we call when it will come. Insurance companies have come up with what we call funeral expenses policies that comes in and pays money. In the event you lose your beloved one, or God also happens to call you home for a dinner, or for lunch for that matter, never to return, the insurance company comes in and pays what we call 100,000, 200,000, 300,000, 500,000 shillings, because you never know. When you think you have got friends, those friends might be having other financial obligations that they have to attend to, and therefore even contributing to becomes a challenge. So why don't you then have a funeral, the last expense funeral cover for yourself? So much for the life department. Let's go to general. You drive a car? Yes. It is a requirement in the Republic of Kenya that your car must be insured. But most of us people, remember, it takes you time, energy, and thoughts to be able to get that particular amount of money to be able to buy a car. Let's say that maybe you have bought a new car worth 5 million shillings. How on earth can you go taking a third party? That you're taking a cover only to secure yourself against what you call the traffic police rules and laws. That is not wisdom. That is not wisdom at all. You need to take what we call a comprehensive cover. A comprehensive cover means that in the event that car is either stolen, you'll be compensated another car to the value of that car. In case you hit somebody else's car, your car will be repaired and the car that you have hit will be repaired. In case you get yourself involved in an accident, the car will be repaired by the insurance company. And as the car gets repaired, some companies normally give you what we call the car as a car to use. Almost of the same standards like the car that was involved in an accident. So why should you go for a third party? Take a comprehensive insurance cover. And I warn you, having a comprehensive insurance cover for your car, you are not covered yourself. Your family is not covered in that car, including your staff members. If it's a company, a car that you have bought for your company, you must have what we call the personal accident cover for your spouse, for yourself, and for your employees. That is what we call now the general insurance. Let's say, for instance, you have what we refer to as a house of your own. It has got so many household goods. You go for what we call domestic package cover. Domestic package cover means in the event, for instance, of fire, and you lose all your household goods, the insurance company will come and compensate. In the event thugs came, burglary, theft and burglary, the insurance company will come and compensate you. So you'll be having the peace of mind wherever you are. So you can't afford to have your house without what we call the cover, what we call the domestic package. Then remember, the house cannot be stolen as a building. So the only thing that can happen to your building, either it can be burned by fire, or there can be what we call an earthquake that may bring your precious building down. You require to insure your house against what we call fire and other perils, like what we call earthquakes that can actually bring down your building. Why should you stay within your building that you spent about 15 million shillings without a cover? Please do that. If you're running a business like a bar, for instance, remember, if anything happens to your patrons, to your customers, you are liable. You are liable. Remember, I'm a lawyer. You are liable. So what you do, you take what we call a public liability insurance cover, so that in the event something happens to your either guests or your customers, the insurance company comes and pays for them. So you don't have to go back to your pocket to pay. The insurance company will do that.
if, for instance, you're at a petrol station